Property taxes. Not exactly the most exciting topic, right? But if you're buying rural land and you don't understand this stuff, it can cost you big time. Hey, welcome back to the Land Buyer's Guide. I'm Scott Thomas with landparker.com, and today we're talking about rural property taxes, what they are, how they work, and honestly, how to avoid getting blindsided by them. Whether you're dreaming about a little off-grid homestead, a hobby farm, or just a quiet piece of land to escape to on weekends, this episode is for you. Let's just get into it. So first, how do rural property taxes actually work? At the basic level, property taxes are collected by your local government, usually the county. That money goes toward funding things like roads, schools, emergency services. Makes sense, right? Now, the amount you owe is based on two things. First, the assessed value of your property. That's the number a local tax assessor assigns to your land. And here's the thing, that number doesn't always match what you actually paid for it or what it's worth on the open market. Second, there's the mill rate, which is basically the tax rate applied to that assessed value to come up with your annual bill. Simple example. Say your land is assessed at $100,000 and the local rate is 1%. You're looking at $1,000 a year in property taxes. Pretty manageable, honestly. Now, a lot of people assume rural land always means cheap taxes, and sometimes that's true, but not always. There's a lot that goes into it. Location matters a ton. A remote piece of land in a sparsely populated county with minimal public services, taxes could be very low. But if your land sits inside a school district that leans heavily on property taxes to stay funded, that rate can climb. Land classification is another big one. Raw land, farmland, timberland, residential land. These are often taxed at different rates, so knowing how your specific parcel is classified before you buy matters. And improvements. This one catches people off guard. The moment you add a structure, a cabin, a barn, even a well or a septic system, your assessed value goes up, and so does your tax bill. That's not a reason to avoid building, obviously, just something to plan for. There are also special assessments in some areas, things like drainage districts, fire protection fees, or road maintenance charges. These can add hundreds or even thousands of dollars a year on top of your base tax. Always worth asking about before you close. Okay, now here's where it gets really interesting. One of the genuinely cool things about owning rural land is the potential to qualify for special tax classifications that can seriously reduce what you owe. These are programs that most suburban homeowners have never heard of, but rural landowners use all the time. The most common one is an agricultural use valuation. A lot of people call it an ag exemption. Basically, instead of taxing your land based on its market value, the county taxes it based on how much income it could generate from agricultural use. That's a completely different and usually much lower sort of number. This program exists in most states and can slash your property tax bill significantly. If you're managing timber, a lot of states have forestry classifications that work similarly. You're rewarded with a lower assessment for actively managing your trees for harvest. There are also conservation easements. If you agree to protect your land from certain types of development, you can reduce its taxable value and actually get federal income tax deductions too. That's a pretty nice combination. And then there are greenbelt laws or open space laws, depending on your state. These are designed to prevent rural land from being taxed at the same rates as land sitting in or near a city. Big help if you're in a county that's starting to see development creep in. Here's what a lot of people don't realize though. These exemptions come with strings attached. You might need to prove active agricultural use. You might need to meet a minimum acreage requirement. Some of them require annual reapplication, and if you lose eligibility, some counties will hit you with what's called a rollback tax, basically back taxes on what you would have owed without the exemption. That can be a nasty surprise. So yes, look into these programs, just read the fine print. All right, so how do you actually research property taxes before you buy? This is important. Do not assume that whatever the current owner is paying will be your tax bill. When a property changes hands, counties often reassess it, and usually at a higher value. So the seller's tax bill might not reflect what you'll end up paying. Start with the county assessor's website. Most counties have their property records online. You can look up a parcel by its number, or sometimes just by address. You'll be able to see the current assessed value, the tax history, all of it. But don't stop there. Call the assessor's office directly. I know, nobody wants to make phone calls, but this one's worth it. Ask them what the land is currently classified as. Ask if there are any exemptions on it right now and whether those transfer to a new buyer or need to be reapplied for. That's a really important question. Also ask about special taxing districts. Sometimes the assessor's website won't make those super obvious. A quick phone call can surface stuff that would otherwise surprise you at closing. And honestly, talk to neighboring landowners if you can. They'll give you the real picture of what taxes look like in that area. People who own land nearby have no reason to sugarcoat anything. They're not trying to sell you something. For bigger purchases, it's also worth sitting down with a local real estate attorney or a tax professional who knows that specific area. Spending a few $100 on professional advice can save you thousands. Now, if you're specifically planning to homestead or go off-grid, I want to share a few extra things to keep in mind. Raw, unimproved land, no structures, no utilities, is going to have the lowest tax bill. That's kind of nice if you're still in the planning stage. But the moment you start building, expect that number to go up. Plan for it in your budget. Building permits are another thing to be aware of. When you pull a permit, the county finds out, and they will reassess your property. That's just how it works. It's not a reason to skip permits. There are real reasons to do things by the book, but just know that a reassessment is coming. Here's something that surprises people sometimes. Even modest farming activity can help you qualify for an agricultural exemption in a lot of states. A small garden, a few chickens, some hay production. It doesn't have to be a massive commercial operation. If it qualifies under your state's rules, it could make a meaningful difference on your tax bill. Worth looking into. Keep records of whatever you're doing. If you're claiming any kind of ag or forestry exemption, document everything. Photos, receipts, any income from agricultural activity. Good records protect you if the county ever questions your eligibility. And one more thing, rural counties sometimes raise their tax rates when they're dealing with budget shortfalls. It doesn't happen all the time, but it does happen. Staying at least a little plugged into local government meetings or news can keep you from being blindsided. Oh, and if you're going to live on your land full time as your primary residence, don't forget to look into the homestead exemption. Most states offer this. It reduces the taxable value of your home and land if it's your primary residence. The amount varies by state, but it can be a real help. Just apply with your county assessor after you move in and establish residency. So here's the big takeaway from all of this. Rural property taxes are totally manageable once you understand how they work. The key is doing your homework before you buy. Know how the land is classified. Know what exemptions exist and whether you qualify. Know about any special assessments. And budget realistically, not based on what the current owner is paying, but on what you'll likely owe after a reassessment. The people who get surprised by property taxes are the ones who didn't ask these questions up front. You don't have to be one of them. All right, that's going to do it for today's episode. If you're in the market for rural land, whether it's a small starter parcel or something bigger, head over to landparker.com. We've got discounted rural properties across the country with affordable owner financing. Some start as low as $100 down and $100 a month. No bank required, no credit check headaches, just straightforward land buying. Check out what's available at landparker.com and take the first step toward owning your own piece of land. We'll see you on the next episode.